announced that a flying disc has been found and is now in the possession of the Army.
Testing 1 2, testing 1 2. Let me know if you guys can hear me across the various streams. I appreciate those of you who are in some newer test streams. We will probably try to roll that out publicly pretty soon. And hello to, wow, there's quite a few on YouTube right now. Hello. If you want to chat in YouTube, go ahead and hit the subscribe button and you can jump into the chat. You can let me know if you can hear this as well. All right, I'll be right back and we'll get started in just a moment. Okay, let's get the music under control here. That's going to be this here. And we're going to get started here in about 20 seconds or so. All right. Let's get rolling. Hello and welcome to Macro Mondays here on Landy's Crypto Corner. Today is October 16th, 2023. I almost said 2021 and I have no idea why. But it is 2023 and we have a nice big OI wipeout to the upside. Shorts got squeezed. There's many that are blaming the catalyst on the news that broke out of, I believe, Cointelegraph. And, that's an issue for you to decide. I'm going to show you some things that might change your mind or make you wonder why they had a particular view on that, or if they had a source on that that maybe misled them, or maybe they took that article and misled others with it. That's for you to decide. I'll show you some data, though. We are going to look at Bitcoin. We're going to look at Dixie, gold, traditional markets, and we're going to look at some stocks specifically tied to the cryptocurrency market. So we'll look at coin. We'll look at MicroStrategy. We might look at miners actually as well, because one of the big things is there was information floating around pre-market today. And there was a really big OI buildup over the weekend, and it was right at the overhead resistance that bulls are trying to push through. A lot of shorts going in with very little protection from the range highs left. So we'll take a look at the OI wipeout as well, because that is going to play into some of the analysis going forward. Not all of it. Traditional support and resistance that we see here on our main chart, which is the Bitcoin in 60 seconds chart, is going to still remain, the primary driver behind price action here. And we'll start here. There was no Bitcoin in 60 seconds videos over the weekend. My apologies. The last one was on Friday after the live stream. But the setup played out. Basically, the setup that we talked about on the 12-hour on Friday bled into the daily after close on Friday's closure into Saturday's open. And, things played out to the upside. We got the move to the downside pretty much right on point for the targets at 26, 5 to 6 on the lows down here by the lower first standard deviation. We got some closes right on that weekly support there, which was one of our big main targets. If we did see the daily start to close under there, then that would have opened up, 26, 26.2 to 26K down by this weekly, which I'm going to show you in just a moment, is still the weekly pivot. So, and that is actually encouraging, an encouraging thing for the bulls to see. But there is a few things that need to happen, especially now that we see this big wick to the upside. So we did hit all of the primary upside targets from Thursday and Friday's video of last week and our live stream last week. It did fall short of that 30,300 target by $300 here on Coinbase. But, as I said, above 29.4 to 5, that's the next big area. And that is open to be tagged. And it fell, $300 short. So that was more of an extra target should we see a scenario like this. And, well, we got it. So how does this wick change things? Well, when looking at the momentum pivot on the daily here, you can see that the momentum pivot is currently at 27,675, right? We are likely going to see a close above there. That's not a guarantee by close today, but if we do, that would turn the daily to the upside here, and that would be an initial cross only. And, a lot's going to be made of this being a really large rejection on big volume, and I'll show you the volume when we get to the volume map. And because it was such a big rejection in such a big area at 30K, that things are definitely going to have to come back down now. Well, the main criteria would be that if Bitcoin does fail to push above this high, we're likely going to see a downside move. But it's more likely than not that this will play to the upside some more. Maybe retest this upper second standard deviation and the daily here at 28.4 to 5. Possibly this wick high 28.6. Now, if we do see price start to close back above 28.6, then I would still be looking for another move up to 29K. A retest of this daily SR level at 29.4 to 5, and maybe even the wick high and higher. But there is a few things that need to be sorted out on the lower term timeframes. And one of the main reasons that I bring this up is because if you look at the 12-hour here, you can see that the momentum pivot is at 27,200. But because of this wick, this is likely going to shift the momentum pivot quite a bit, as we're going to see here on something like the 4-hour, where the momentum pivot is now all the way up there at 29.4. So I would need to see some consolidation above the $28,000 level. Now, I had mentioned that above $28,000 to some of you, I'd mentioned that above there, shorts are getting wiped out. We start seeing closes back above there because of the OI that was building up right in that area over the weekend, that it's pretty likely that those positions will be let go. And that's exactly what we saw. So I do want to call this out as well. On the 15-minute chart, this is why support and resistance on the daily, weekly, and monthly is so important. When looking at where the closes came in on the 15-minute chart for this Bitcoin in 60 seconds chart that I typically show, you can see that we were testing the bottom side of that $28,000 right around the highs again here of this particular consolidation, well above this was well above the daily at 27,500. So we were already starting to see the early etchings on Sunday of this move up. And if we saw, the criteria was if we saw this move, basically, we saw the move to $28,000 up here over the weekend on Sunday. And if it can stay above basically the daily support there at 27.5, consolidate a little, it was probably going to run that $28,000 weekly area. And I had mentioned to some of you that if it got above there, we are going to see a short liquidation event, and or in this case, the liquidations weren't massive. It was a lot of positions being let go though. So stops being hit, and positions closing, profits being taken on the way up, stuff like that. So shorts closing, longs taking profit, and OI just getting absolutely obliterated, as we are going to look at in just a moment. But the reason why support and resistance on these longer time frames is so important is because you're going to see, you might see wicks through to the upside, downside on these daily, weekly, and monthly supports. But when they are holding and closing above, they're going to act as good areas to keep an eye on. And in this case, we got to close open literally right on that overhead daily there after getting above the $29,000 area at 29.4 to 5. So, this was a setup that, we talked about last week on the 12-hour. This was one of the main setups. Now, could I have told you that it was going to get there in one candle after breaking above 28,500 or 28 to 28.4 to 5, that area? Not really. I mean, no one can predict that, but it's on the table, right? Especially with where OI was. So if you are keeping track of open interest, then this was pretty clear that shorts were really going heavy here as price was moving up. Funding flipped negative, all that kind of stuff. So all the signs were there that a short squeeze was very, very, very possible. Now, I wouldn't necessarily consider this a bad thing. In fact, a lot of this is probably positioning. So a lot of coin margin longs and then USDT shorts is what I suspect, because that's what I'm doing. And bracketing and positioning for a longer term move, over the weekly in this case. And that does mean anytime you're range bracketing, when you let one side go, the other side's going to fly, right? And it did look as though that's what was happening in these markets. So let's go ahead and look at OI here. We can see that OI is now back down around, around the 27,200 area. Now it was building up pretty heavily below that area to almost $9.5 billion. And then we saw a wipeout. Let's see, that it got to 9.415 billion. And then a little over $1 billion got wiped out to the downside in terms of open interest. Now, this is not liquidations. This is margined positions, so leveraged positions in this case. And when looking at funding rate, we can see that funding dipped quite negative yesterday into today. So on that move up to $28,000 or so, we saw funding dip quite negative here and remained there through pre-market New York session today, when it did start to flip at around 6 o'clock my time. So about 30 minutes before market open. That would be 9 o'clock on the East Coast. I am on the West Coast. Then it did flip positive as Bitcoin headed up towards the local high. Once it started pushing that high, many saw the news, but the news broke right as price broke. So, you're going to get many that say, this is manipulation. And there is a case to be made if you can prove that that there was some kind of malicious coordination on the back end. But I'm going to show you that it wasn't just Bitcoin futures markets that were moving like this. So, and you can disagree, you can agree. I just want to show you the data. When looking at Coinbase, pre-market does not show on TradingView. But this is the 15-minute pre-market candle, 15-minute gap up from Friday to market open on Coinbase, and we saw a very large move up there. The move also showed itself in GBTC, which is not the iShares Trust stuff, and we saw it in MicroStrategy. Look, this is fund managers, okay? Fund managers spent most of the morning, and I wish I could talk publicly in a little bit more detail, but because I do have to sign specific NDAs regarding certain things. But what I will tell you is pre-market, there's a lot of conference calls. There's a lot of setting the board for trades as soon as CME opens. In fact, there's guys that go in and start getting things ready for Monday market open. And, keeping an eye on foreign sessions as well. For those of us that live in the United States, that means we're keeping an eye on overseas indexes and maybe even specific stocks, bonds, so on and so forth. A lot of corporate stuff as well. But, that pre-market period is not reflected on TradingView. I really wish it was in the candle structure. But in this case, pre-market was already moving up on Coinbase, on MicroStrategy, on GBTC, and it was moving up prior to the news breaking that was turned out to be false. But maybe, I can't speak to what the motivations were behind the article, but how can I say this? There probably is some veracity to what was being said. Maybe it was just misconstrued, because there are people that work at many of these outlets that can join some of the pre-market conference calls that are going on. And it could have been purposeful misunderstanding of what was happening, or it could have been a actual misunderstanding of what was going on. But pre-market was already kind of in. And I do want to let you guys know, about 15 minutes before market open is when you start getting those, you start shifting from pre-market strategy. If you are trading, depending on your time frame and time horizon, the account size, the fund that you're operating, the portfolio that you have, and the risk management guidelines that you're following. So with all of those exceptions, generally speaking, in the places that I have been, you have about 15 minutes prior to pre-market, which is when this started to move and break. It was like 620 or 622 or something around there when Bitcoin really started to just rocket ship. But about 6:15 this morning for me, or 9:15 on the East Coast, is where you get kind of all of your these orders kind of all pulled in for the actual market open session. So a lot of big deals and a lot of stuff flowing and happening behind the scenes. And then, that obviously will then show up in that last 15 minutes of pre-market right into the open. And you'll often see these moves happen, somewhere around 30 minutes, 15 to 30 minutes before market open when you're looking at pre-market on traditional markets. So the one pushback that I have to a lot of the, oh my God, this is pure manipulation by, Cointelegraph. There's even some tweets out there showing that they had a roll bit position. Look, they could have gotten information from insider sources and or been on specific conference calls where they thought they heard something and took the long position, wrote the article, and went with it. It's not always a scenario where there is malintent. Now, if there was malintent, you can be sure that there were some fund managers in on it because we had traditional markets also make very similar moves. And this is not driven by retail. This is driven by fund managers. Look, you can get some bigger retail whales that come in here, but when you see, MicroStrategy, GBTC, and Coin all just going at the same time. I imagine, in fact, I believe Riot moved as well. Oops, helps if I spell it right. So I believe Riot moved as well. Yeah, Riot did the same thing. So all the miners did the same thing. I think Mara did the same thing, which is Marathon. So, yes, are they all connected on the back end? Could you make the nebulous case that this was maybe purposefully leaked to do this? I mean, there's all kinds of scenarios you could come up with, but with pre-markets moving the way they did, or the pre-market session moving the way it did, with the combination of built up open interest at this level, it wiped a lot of people out. So, and quite frankly, it's not a good look for the industry. I will agree with everyone that it is not a good look for the industry when you do have a news article that is not based in fact put out there prior to market open. It is a bad look. It is a very, very bad look. I mean, if you're going to make the argument, maybe Gary's in on it, right? Like, which, I would love to speculate. It sounds like I'm making fun, but I would love to speculate about that because I wouldn't put it past, SEC insiders doing some shady stuff, right? So, but I can tell you 100% for sure, there was a lot of positioning happening in pre-market today. And, we saw a nice wipeout to the upside. So I'll leave it at that. You can come to your own conclusions on whether or not you think it's manipulation or not. And that's okay if you believe it is. Or if you believe that it was, a benign thing that maybe was a little bit of a misunderstanding. Or somebody leaking information. Never know. Maybe later today we get some news. Never know. There's always that as well. But in any case, when we look at Bitcoin, we looked at most of the things that I said we were going to look at. 15-minute, we looked at that. The 12-hour setup, this is a big one. Anytime you see things like just rocket through the upper second and third on a wick like that, and hitting a nice round number, what this tells you is there was for this on Coinbase, there was a lot of exit positions there. This could also play into some OTC stuff. So, and what I will say is because they run an OTC desk, because they have all of these ETFs will be under custodial management through their custodial branch. The one thing that I would say is the fills got filled perfectly. That's not always going to be the case. So anyway, getting filled perfectly at 30K, which is a nice round psychological number, probably hit a lot of limits on regular spot buyers as well. So, and your Coinbase Pro people who do have a few extra tools for hedging as well. So, when looking at, let's go ahead and take a look at the volume that I referenced. So, this was something that we've been tracking for a long, long time. So, this would be the volume map. And this is, quite frankly, some of the biggest volume we have seen on Coinbase. And it did all come on the bear candle. So it came in at the high of the bear candle and then right back down. That is where we started to see a many positions closing up there. So we had, the move up, and then you've got the profit take back down here on the 1 minute, right back to our 27,871 area. You can also see that on the 1 minute chart, that volume map rejection, move back up, initial push through on lower volume, higher volume hits. And yes, when was this? This was at 625. And the article, I believe, was like 621 or something. It was back here when it was a little bit more quiet. But run up into market open. You got about 5 minutes before market open. Not much volume. Market starts to traditional markets open, and that's the high at 6:30 there, my time, 9:30 Eastern. So, and what did it do? Came right back into our volume-based map here. So, if you are not using the volume map as well, I would suggest that you build it. You can go back to the prior streams to see how this volume map was built. One of the big things that I noted yesterday was the pretty much picture perfect way that things played out from the 26,670 area, or 26.6 for nice round numbers. When we did see the breakout above there, we got our move to to me not finding what the heck I'm supposed to be looking for here. Here we go. Once we saw this breakout candle, it ran right to the high here at 27, and then wicked above, came right back down, found support at that 26.7 to 8 region, bounced around for a little while, came back up, ran 27K, or in this case, $27,074, dipped down, and then started working its way up to around 27.2 at the monthly. Wicked above, came back down for support at $27,074, kept pushing this, and then nice move up this weekend on that to the $28,000 region. Started to get a little bit of a rejection, cool down, and then right back up in there once it reclaimed the 27,871. Pretty clear that it was going to at least go run this high, and more than likely the $28,000, $28,062 area. Once it did, boom, up. You saw it on the 1 minute. It was literally dancing right there on the edge. And then once it broke out, boom, we got our move up to 28.4 to 6, 29K, 29.4 to 5 on the close, and then the wick there at 30,000. Very, very, very constructive price action, playing very well into psychological numbers, working well with the volume, the bands, everything else. So, and our support and resistance. But how this is going to affect things going forward is, a big wick like this outside of this is going to create a lot of price action inside this bar. And when you have an inside bar, when you have inside bar price action, you can basically use this bar to kind of be your yardstick for what price is doing. And this is where we can get into a volume-based fixed range volume rather. Sorry, my phone is ringing as well at the moment, so my apologies. Got a little distracted there. All right, so when using fixed range volume, this can kind of give you, I know JR will like this. We're back using fixed range volume. Now, well, in conjunction with our volume map, this can help us identify that, okay, the primary bit of volume on the low is that consolidation around 27.2 to 3, right? So basically we lose this consolidation here. It's going to be right back down, right? To 26.5, maybe 26K, maybe lower. If it can start to break back out above the 26 or 28,550, which is the 28.5 area, that is our daily overhead, that 28.4 to 6 area. That's this area right here, this blue line. So we've got our 28.4 to the wick high there that was at 28.6. If it can start to reclaim that, that's where we're looking back to the lower liquidity side of things on the highs there. But because we have to be aware of where most of the volume came in on that high, even in some of the lower term timeframes. If we look at the map that we built with this, and we're going to have to go lower time frame because we had basically one big bar up and one high volume bar down. We can mark this high volume area up top as part of our map, but we want a little bit of refinement in between. We can keep it general, but we do want to have a little bit of refinement in between. And that's where, because the move was so fast, we want to scope out maybe even a 1 minute is going to be worth it. And just kind of see where is the biggest areas of volume on this move back to support, right? So we see basically it was right on the supports here, and that is good. So we don't need to mark any of those because they're right on the actual areas that we already marked at 27.8 to 28K. But the move up, the first big volume area that was hit, price is already trading above there, so not going to be as relevant. Next bar, price is trading right around here. That was a significant bar, but I'm really looking for not equal bars. I want this higher bar that's just above it, because I think that's going to be a little bit more important, as we did see. And I think you probably knew where I was going with this already. But because this higher volume bar, we see the volume build, we get the highest volume bar out of that set before the actual high. And when we see the actual highest volume bar at the high, we get the move back down through this, and then it pops up and finds it as resistance. So we get a little bit of a move down and then an SFP right at that higher volume on the way up. So that is going to be our new areas to watch to the upside. And go figure, where is that? $29,000. So this is going to be the zones to watch, at least what I'm going to be watching in terms of volume. And what we can do is we can get some edge here by looking at the areas that the fixed range volume utility is lining up in. And it is telling us that this bar is also important, the one that I skipped over. So what I will say is, if you're going to use fixed volume for the daily candle, just take the daily candle. It will be an inside bar. So what you want to do with this fixed range volume is you want to take the daily candle, you want to extend it right, so that the subsequent daily candles, if they are closing inside of this daily, that means from wick to wick low to wick high, or wick high to wick low, whichever you like, then you do want to do the extend left, so that as long as price is remaining inside of this bar, we have our inside bars, and we can use that to say, okay, well, if we do see Bitcoin breaking out above 28.5, well, we already know on the daily, the next big area, 28.5 to 6, if that area starts to break, this would be the value area high. Where's the next big candle to be looking at? Well, the next big candle to be looking at is at $29,000. We can see it on a 1 minute. We can see it on the 15-minute closes. We can see it on, all of the other time frames where this confluence is lining up. So that gives us our edge. And nice move up. And when looking at this in combination with open interest, because open interest did dive so deep, and we saw, basically $1 billion wiped out of the market in terms of open interest, it kind of resets the board. So as long as Bitcoin can stay above that area at like 27.2 specifically, 27.2, we'll call it 27.2 to 27.5. And the reason why we can call it that is because that meets all of our criteria for being above the monthly and above the daily. And that's also the main areas that Bitcoin was flirting with over the weekend in terms of our volume map. So as long as Bitcoin is above this area or this zone, and you can even take the basis, because if it does start closing back below the basis, well, this is going to be a bit of a tough ride for every market participant, because then we will be a bit trendless again on the daily. Because we had this nice uptrend. We had the trend break or lower low in this case. Yes, it is a higher low compared to this low, but if you're taking pure structure, this was a swing to a lower high, lower low trend break. And then we can see that if this were to close above this high over here, or this last lower high, I should say, then we have basically a trend break to the downside, a trend break to the upside, and the trend is your friend until the end of the trend. And then when the trend is unclear, everyone's in fear. So we're going to keep that that little idiom alive. I think it's an idiom. You can correct me if I'm wrong. But that's kind of where I would be watching in terms of Bitcoin. Now, the reason why I say that this is a bit of a reset, when you see open interest rising, price rises with it, and then we get our washouts. Okay. Now, one of the bigger things that you do want to keep an eye on here, especially if Bitcoin kind of fails to continue to the upside, and now take out that wick high at $30,000 over the course of maybe the next week or two, I would say OI has the ability to fall lower. I mean, OI went and wicked the low in today's candle. It's trading back around where the actual structural, longer term higher low is. But, I would say 7.5 billion is kind of where things wanted to base. Of course, that was down here at $24,800 to $25,000. So having an uptick in OI by $1 billion or so to get price, a couple $1,000 above there, you can make your own judgments when looking at that. For reference, Bitcoin traded back up to swing this high over here on the hourly. In this case, this was the high at $30,000 or so. It's like 31 or 30,200 or so on the wick, but like $30,000 on the high. And in this case, OI was all the way at like almost $11 billion. So there is room both to the upside and downside. And generally speaking, when we see OI rise, price rises with it. When we see OI fall, price tends to fall with it. Now, OI is not falling in this case. It is still rising. So the wicks are getting higher, the lows are getting higher. So it is rising. So that does still generally point to upside. If we start to see this falling, then, then we're looking at, maybe a washout back down, break the OI structure on a higher low basis, and then we see the lows get ran again. But for right now, we can't fight what is happening. The trend is your friend until the end of the trend on those lower term timeframes, and it's trying to work on that on the daily. I also do want to call your attention to Crypto Quant's chart as well. We have price here. We've got open interest, which is purple. And open interest is right now, this is, not going to update till later today, but 8.389 billion. I think it actually is live updating. It's just not giving me the bars because this is, it's actually showing a little bit different look on OI today than, your Coinalyze chart and or your look at the futures total interest from CoinGlass as well. Now, when looking at open interest from CoinGlass, do note that CME here is included, and CME is about $2 billion in open interest. And what you might note is that the 4-hour change on CME open interest and the 24-hour change in open interest increased by 4.4%. So, you take your 4.4% of 2 billion, and you can see that there was quite a lot of movement in OI to the upside for CME. And I do want you to note, there was open interest, an open interest move up on OKX here, 4.17 in the past 24 hours, right? But OKX trades 24/7, and their open interest in the last 4 hours got wiped out, and CME went up. So what this does tell me is there's not a lot of, in my opinion, there's not a lot of a case to be made that if there was some sort of coordination, that it was happening on the crypto side of things. CME is generally going to be the winner in this, and unregulated markets are generally going to be the loser in this. Now, how this is different is CME was actually the loser during the FTX stuff, and a lot of OKX was the winner. So, take that for what you will. When looking at liquidations here, we can see that, liquidations over the past, let's see, longs wrecked, shorts wrecked, let's go 24-hour wrecked, 136 million on the short side. That's not very much. So a lot of spot-driven buys going on. I can tell you for sure that there was a lot of OTC movement this morning. So maybe if we see some announcements soon, I can talk a little bit more about that. But let's see, short liquidations. Next to nothing. Yeah, so this is the 15th though, where shorts were already getting hammered, and then they shorted after getting hammered and had very little risk movement because they had no protection once they took it on the chin there. We have Coinalyze is going to come up with short liquidations at around 29-30 million, and long liquidations at 13 million. So in this case, this is one of the things that I don't like about the liquidations calculation here is it's a little unclear. This is perp contracts, but it's a little, I guess it is. So it does mix USDT and USD. So one of the things is if it was 29.56 million, well, yeah, that just, it doesn't add up. In my opinion, that's where when I'm looking at liquidations, if you're going to use a platform for liquidations, you can go sign up for a free crypto quant account. And you can get the liquidations total there as well. You will only be able to get the daily time frame after it closes, though. So I would tend to take a look at CoinGlass. What I will tell you is if you're willing to pay for crypto quant, you can get like up to the minute, data for this, and it's very reliable. So I've used quite a bit of it on the institution side of things. I cannot show you that here, but I can show you this is just a demo account. So you don't have to get any of these programs or go to Crypto Quant or Glassnode or any of them. CoinGlass does a good job. I still think that Coinalyze does a good job as well. So you can, you can get up to the minute information as well. So you can go down to the minute chart here and take a look at where did most of the liquidations start to happen. It happened right on the high there at 28,282. So our big our big level above the weekly there after swinging above the weekly at 28K, which is more like 28,074, 75 bucks or 28,100 if you like above there. Then it was started to kick off liquidations up to this high here, which was at 28.4, and that's right at that daily overhead resistance above that weekly. So yeah, that's pretty much it. We updated our volume map. We took a look at the daily. We know some of the criteria. I guess I should cover downside here. So, from here, we got to see where things close today. Bulls are going to want to push for a close. I would assume at minimum you want to see closes if you're bullish above this last lower high. If this gets sold down below this lower high at around $28,000 even on the close there, or the close, yeah, It's basically $28,000. It's $4 under. So if we see it close under $28,000, it's not a death sentence, but that would not look good for the bulls. And bulls preferably want to see a close above there and a close above the open of this candle from Monday the 23rd. Go figure, a Monday, right around resistance in this case. A lot of longs were in the market and they got wiped out to the downside. Not nearly as big here as positions were just kind of running away. But in this case, this open was at 28,200. So that close open, go figure, that's right around where liquidations began. And then, of course, a really bullish close will be a close above this wick high at 28,613. Now, if we did start to see the monthly there at 27.2 fail, well, I think that things start to turn pretty hard back to this weekly here at 26,750 to the low at 26.5, and then probably runs the weekly down here at $26,000, maybe even all the way back to the lows here. But that is, speculation. We would need to see those areas break down. And the weekly as well, I want you to note here, did get a maintain its cross rather to the upside here. And the momentum pivot is 26,100. So it's right around that weekly support at 26K still. And this is a good thing for the bulls, especially if we see the weekly close, quite a bit higher and really start to push through some of these zones to the upside. So do we have any time frames that are closing? Let's go to a cleaner chart here. We can take this and this, and we are going to move these into it's not going to work apparently. Let's go ahead and try this again. We'll move it down. Usually it'll scroll. Didn't want to scroll that time. Get rid of the volume map. And we can start looking through some of the higher term time frame closures above the daily that are going to be closing soon. We have the 2-day open. Let's go ahead and throw on the bands. We see a move right to that top side there. Let's get rid of the fixed range volume. We got to move right up against that upper second standard deviation, and at least in terms of where price is kind of trying to settle in around this 28,400 area. And if it does close above in the next 2-day candle, which we will see coming into our Wednesday live stream, we'll see the close open here. So we'll talk about this. But if it does close above, we would be looking for, that nice move down. Got that nice move. We didn't quite get down to that lower second standard deviation, but sideways, drive down to take the lows, back up, trend transition, higher high, breakout here, higher low. And we've got, we maintained a nice higher low structure on the 2-day here. And if we do see expansion to the upside, that's where we really are going to start looking at this high here at 30,200 to the weekly there at 30,300. Likely getting taken and things running back up to, 31 to $32,000 or so. And then that will, of course, bring up some of the higher time frame targets to like the monthly at 35,000 and so on and so forth from there. If we do see at any point this retrace and start to take out 26,500 on the lows, lower first is going to be in play at 26,150. Of course, that's around the weekly pivot. That's also, we could see, this 26K down here, this low. If that gets ran, if it doesn't close back above the lower first at any point, then we'd be looking right back to the lows around the lower second standard deviation at that 25.5 to, you give it room. We'll just be general 25.5 because it's not headed that direction. 25.5 to that low at 24.8 to 24.9 in our beautiful zone down here that was hit on the Bitcoin in 60 seconds chart. What a beautiful zone it was. So from the 2-day perspective, I do want to see where it closed. Yeah, it closed right on top of that zone at around that 25.1 region. So that would make sense to run it right the other way. Maybe wicks below or not. But right now it's pushing the upper second standard deviation. So we'll evaluate this coming into the close open. We'll take a look at it rather on Wednesday. Now, this is the other thing here on the 3-day uptrending structure. Nice wick. Took out the close open of the breakdown area on the wick. It even wicked this little consolidation move down on the close opens here, and even got that high at 30,000 or so. So this is going to be another one to watch. Of course, this one will be closing on Wednesday itself. So we'll follow up with where Bitcoin is. We'll see where the 2-day closes. If it closes above the upper second standard deviation, if it does, it's likely that we'll see the 3-day close on Wednesday's close above there as well. But it can play all the way back to the basis. Again, that's right around the lows at 26.5. Below there, we're looking at 26K, right at the next low at the lower first, and below there, right at the actual lows at that 24.8 to 25.1 region. So we're getting the same look across everything. Momentum pivot is 28,282. Now, this is the pivot. It was starting to turn from the previous trip up to $28,000. So this was starting to reflect this move down. It is going to be interesting when we follow up on Friday to see where price closes and what this pivot ends up at on the 3-day chart, as it might whipsaw from the high side to the low side and or stay even. It's a little bit tricky in this case to tell with the 3-day. 4-day still headed up on closes above 26,628. This will not be closing with this 2-day. It already closed and opened into today with the current 2-day candle. And, it's looking pretty good so far. We'll see where things close. Of course, this is a bit of a trendless structure. No, I'm sorry. This actually closed above on the 4-day. I think it's the... we'll look at it anyway. I think it's maybe the 5-day or the weekly close below. It's probably the weekly. Anyway, this is still in an uptrending structure. It's not the prettiest uptrending structure, but the 4-day is maintaining its uptrending structure. Until this starts to twist back up to the upside in terms of bands and or gets closes above the upper second standard deviation, this is going to be a very heavily contested zone around that weekly there at 30,000 to 30,300, maybe even wicks above to 30,500. If it can, however, close above the $30,000 level, then, and that's on the daily, then I'd be looking at this area, this 29,650 upper second standard deviation is likely getting closed above on the 4-day as well. But this is setting up for a bit of a range look until we see that. So take out this high, get above the upper second. We're going to see expansion up to the actual high there at $31,800 to $32,000. If we do see the basis band start getting closed below, that's just below the monthly there. It's coming in at 27,160. Then it's right back to this recent low. We're probably looking at this as then coming down to the lower first again at 26K, the weekly pivot, and then below there, the lower second, which is at 24,670, 24,700 area. So right around the lows here. In fact, it's creeping right up to this prior low at 24,750 rather. 5-day, we'll be closing with the next 2-day candle. This is the bigger range structure on the bands. When I say range structure, I mean obviously price is ranging, so are the bands. The lower second is now squeezing back up into this low. Again, it's right there in the same spot. In this case, right around 24,600. That's where to the downside, should we see that area break down, I've been talking about the weekly at 24.3 to 24.5. In this case, 24.6 is right where the 5-day lower second is, and the upper second is right there at just under 30,800. and that's your close open right here, 30,771, kind of lining up with that upper second standard deviation. If price starts to move there and close there above the upper first on the 5-day at around that 29.2, of course, it still has to break the daily overhead resistance, but generally speaking, if the 5-day closes up there, I'm looking to the upper second. That's where we would see the highs get ran back below the basis band here at 27.6, almost 27.7 in this case. Then I would be looking for the lows to get ran again. We're seeing the same picture down to the lower first, which is around 26.150, 26.2 or so, the high side of these close opens here on the low here. And if we see that drop, then we're looking to that 24.6, 24.7 area again. And the weekly is also setting up a range play. But the weekly does look a lot more like a major low. So yeah, this looks like a major low being built. I'll be honest. Just this last weekly, the way that last week closed and was not the greatest. But this weekly open test up, where I would start to get a little concerned for the bullish side of a trade would be if this weekly fails to close above that wick high at 28,613. So let me be very clear. I would get concerned for the bullish side in the shorter term on the weekly here if we did start to see that fail to close above. I would still give it the back half of October into November, though. It just means that it's more likely that if it fails that high, that it's going to try for the low at 26.5 again, which of course then leads us back to the lower first as a possibility around 26.2 to 3, and then maybe this low down here by the lower second, which is coming in at 24.5, which is, our weekly structure here. So 24.3 is this high over here. It's also basically this high over here, 24.2 to 3. So we've got these two highs on a close to that lower second. So that's where we get our 24.3 to 5 zone to the downside. Momentum is saying, as long as things are above 26,100, though, pressures to the upside. This is more than likely a major low being set before our eyes, and we are looking at the highs probably getting ran and higher. So, yeah, not too much more to say on that. I've said a lot, and then I say I don't have too much more to say, and then I have more to say. So I apologize. Let's go look at Dixie, because Dixie is currently putting in the etchings in the early goings that it might set in another drive, and this is what I wanted to see. We either get bearish divergence in trend from this high or in trend from these highs. And if it does confirm that bearish divergence today by putting in a high, basically here or lower, this would be your nice 3-candle high structure. That would indicate that things will come back down and at least test somewhere in and around this 105.88 to the 105.65 area, and possibly this low by the lower first, which is coming in at 105.60, we'll call it. It's a little bit above there. But likely that area would get tested. If that breaks down, then the secondary targets come into play, and that's the lower second by 105.10, possibly down into that lower second third area on a wick, unless it really starts to consolidate underneath the basis and turn the bands down. If we do see them uptrending like this, I do think the stopping point on any kind of a faster move would be 104.69. Nice. The weekly does also support that area to the downside in terms of the initial bearish divergence daily target back to the current low. And that is because the upper first standard deviation is coming in on that wick area anyway at around that 105.60 area. And again, 105.60 on the daily is right where that lower first is. So that's the lower first area, 105.63 in this case, to 105.60 on the upper first for the weekly. And the upper first is bullish, just so everyone understands. This is still bullish structure. Now, when you zoom out, could the case be made that, if it fails some of these areas, this was deviation and then it's right back to the lows? Maybe. I'd argue that the monthly is really the thing to keep an eye on, as we talked about last Friday. As this is a pretty long-term time frame low breakout, and then this would be the monthly retest. So, and you can get some squishy candles here, dojis. Sometimes I call them squishies. It would still give me being above the basis still gives me the bias that at some point this is going to test, 107, 108 region and possibly back to the highs at that 110 to 112 region around the close opens here, and the upper second standard deviation on the monthly. So, as I couldn't get the the arrow to release my pointer here, let's go take a look at gold. Gold still on the weekly, looking pretty good. Recovered that on Friday. I'm sorry, that's the monthly. Let's look at the weekly. Might be helpful. Recovered that basis on Friday. Really beautiful close on gold here. Dipped down into the zone in a higher low fashion as it relates to this low over here. Yes, this is still a downtrend. So this is still a weekly downtrend, but we have a nice reversal. Not going to fight a reversal like that, that's for sure. Back testing back down to the lower first at, 1900 and under, even down to the lower second at 1858, 1855 to 58, where this support line's coming in, and the lower second. Not out of the question. Above the basis, though, as long as it's trading above 1922, in and around that area, then I would be favoring a move to at least these highs at 1947 and 1950 area to that upper first at 1956. If it can get above there, then we're looking to the next set of highs, that 1960 to 1980 area by the upper second, even to 1990. But I would not be surprised if we saw pullbacks. Let's look at the daily and see what it looks like. Daily looks very good. Back test that upper first area. It's got room all the way to the basis. Again, that's the 1880 area. If it does retrace all the way back there to this order block at around 1875 to 1868, 69, nice. Then I would be looking for it to run back to the lows, bearish retest, equal highs up here, all that jazz, and probably run back to the lows. That is only if it starts closing under there. Above there and the basis, which is coming in at 1877, 1880 region, and preferably above the 1890 support area here. Then I would favor the upper second, where it's currently trading around 1917. Upper first at 1917 to the upper second, somewhere around that 1960 area on the daily. Daily momentum pivot is all the way at 1874. It is going to catch up quickly this week. So if we don't see continuation and we see a pullback, then those areas to the downside are going to be something to keep an eye on. Let's look at traditional markets on the open today, and they're green today. Look at that. Dow is trying to recover the area that I had mentioned. So we hit our target to the upside, chopped around through Friday, and now it has tested to the upper first. So target hit. To that upper first. Again, that's this low side area right here at around that 34,000 to 34,100 on the wick and the close here. If it can get above, then we're generally looking to somewhere around, 34, 250 to 290 at this wick area. 250s right around here. I'm sorry, this is 34, 150. 150 on this wick high to 34.3, we'll call it on this wick. You can take the close above there at 34.351. If we do see that area, then we're looking at this gap, that 34.330 to right around this overhead resistance there at 34.464. If we do see a high put in, just watch this low wick at 33.455. Below there, and the basis, of course, would be bearish. If it is below the basis, then we're looking for that area to get tested around 33.455. And the basis is currently at 33.692. Below there, even, I'd look to the lower first again at 33.3, and possibly a run of the lows again by the lower second, somewhere around 33,000, 32.9 area. Looks good, to be quite honest. Did we get the turn on the weekly? We got the gap up, of course. Yeah, nice gap up. Let's look at 34,254. So still got room or pressure down in this case. But if it can recover that pivot, 34,254 by Friday, then we're looking at initial cross up. The easy portion of this bullish divergence has played out, but I think that it could still have room. It already wicked off the weekly here in today's price action, but the simple moving average is the next area, and that just happens to be at 34,392, which is right around this momentum pivot. It's a little bit above that momentum pivot, so this kind of gives me the bias that if things are going to continue up, that area could get spiked, even if it's just a wick. If we start seeing closures by the Friday close above this pivot, then we're going to get the initial cross back to the upside. So that would look good for bulls on Dow. I suspect NASDAQ's looking a little toppy on the daily still. Yeah, because of Friday's candle. So still looks a little toppy. Very much above that upper first. I'd still look back to somewhere around the high at 15,250 to the upper second there by the wick at around that 15. We'll call it the wick at 15,300, 333 in this case. If it does start closing above, then we can mark up to somewhere around the next high side area, because this high wicked into this low over here. We can see prices trading above this low. So the next big area would be, 15,400 to 500. If it does drop the wick here, specifically even if we see a close below the upper first at 15,100, then we need to keep an eye on around 14,943 to the basis here at 14,876. Below there, we're looking at 14,700 and the lower first here at around 14,650. And then below there, back to the lows. So it's a bigger range, anywhere from 14.5 down to the wick here at 14.430, 14.4. I would just give it room down to the lower second around 14.4. So maybe even swing that low. Weekly. Well, let's look at the daily, actually. What's daily momentum looking like? 15,100. Again, that's the upper first standard deviation. So start losing that. Daily's going to turn on momentum, and then we keep an eye on, basically 14,900, 14,950 area. That's going to be... Yeah, that's going to be it for that. 15,158, if it can close above there, which it's currently trading above right now, then we will see an initial cross back to the upside here for NASDAQ on the weekly. So it doesn't necessarily have to get there this week, but I would say we're probably looking at this. If it is going to happen, it's going to happen in these next 2 weeks coming into the close of the month. When looking at SPY, we can see that SPY is at 436. Nice reclaim on the daily here of our trend line. Look at that. Look at the trend line. The magical, all-powerful, all-knowing trend line. It's right by the upper first, swinging around its local high. If it puts in a high here, we got to keep an eye on 430 at the basis. In fact, it's a little above there. It's almost 431. I suspect it's going to move somewhere around the wick low though, here at around 429.88. So basically, still got to keep an eye on the downside at 430. If it drops that, it's realistically looking like it's going to head somewhere around 425, 427 region, up around that lower first. And then, of course, below there, it's back to the lows by the lower second at 420, possibly hitting that 415 area that we've talked about prior. If it can start closing above the upper first, which, of course, is going to move down into price. So it might close open on it. So it's got to start, it's got to basically run the high here at 437.34, get a close above there. Then we're looking to the top side of this gap at 438.64 to the upper second. And that's coming in at 441 right now. Above there, we're looking to this breakdown candle at around 441. So we've got, that's 444 to 445. It's got to contend with this low at 443 though. So just keep your eye on this high to this, this low to this high at 445. Above 445, I'm looking for a run to somewhere around 450 to the highs again, to 455 or so. It's got to turn this daily. It might take a little while. We'll have to watch it this week. We'll see what develops out of that. The weekly here, that tap on the lower second, gap up. We're seeing this across markets. So, and 440 is going to be the weekly momentum pivot. So it's got to basically take out its local high this week, and then it could potentially get an initial cross to the upside on the weekly time frame. So, all right, I think that's it. I'm going to open it up for some questions here. We're going to go back to Bitcoin. We'll take a look at the vaunted 15-second chart. Keep a real close eye on price action here. And let's see. Okay, you guys are going because you guys have meetings. Yes, thank you for hanging out. Congratulations for those of you that are taking your tests this week. We've got I'm gonna clap over here away from the microphone. We've got another couple of guys going for their Series 24 and one for their Series 57, right? Perfect. That's this week. Cool. Congratulations on getting to your testing dates. I wish you tons of luck. I am not going to be talking to you before then. So we'll just have to see how things go. Yeah. Jimmy will let me know. Your coordinators will let me know. Thanks, guys. Take care. Thank you for hanging out. We do still have quite a few people over here in the YouTube chat. Not many chatting, but I see there's really only a couple of you chatting right now, but I do see a lot watching. If you are watching and you would like to chat and ask questions and or maybe not a request today, we have gone a little bit longer than I expected because I can't stop motor mouthing. But if you do have any questions, you can hit subscribe and you're able to chat in the chat. It's free. And also it helps the channel when you subscribe and of course like videos. Let's take a look here. So hello Jedi, hello Bobby, hello Roka, hello Cheryl. Hi Cheryl, you're here kind of early. Let's take a look. I have no idea what you're talking about, Jedi there. Bobby, yep, talk to you. Yep, test, yep, okay, looking good. Had sold, BTC sell orders hit. Happy, good job. Take profit, I'm assuming, when you mean sell orders, and or if you had sell orders that got hit and you're in a profitable short, congratulations, very good. Bobby says, admit it, you leaked it. No. But there's probably some people that sit on those conference calls that are sources for some of these publications. So, and if they are only taking it, which they got to be careful, because if they're taking a source of a source of a source, that message could have changed a lot. by the time it got to them as well, which means that they need to have better journalistic practices and standards. But we all know that journalism has fallen on its sword in recent years. Let's take a look here. The Coinbase high at exactly $69,000. Yeah. Yep. Let's see. So it looks like I need volume zones for 28, 29, 30K. It just tack on. It's still an upside move, but so it's still an upside move. Take your volume map and just you're mapping above the prior area that you had mapped. That's all. Until we see a downtrending structure instead of an uptrending structure, then we'll change and shift it to that volume map to the downside, right? High volume on the lows on the way back down. That breaks down currently with the way the map is constructed from a major low. In this case, that's going to be 26,500. So 26,500 breaks, then we have the volume map from wherever that high was to that low. And then you just throw on a new map, and then you type out the high to the low in this case. Speaking of which, I should probably update what was the high? It's 30,000. So in this case, this was a volume map from 20. Oh, this one was from 26K. So in this case, we'll do 30K. So 30,000. So now this volume map has just been extended because it's still an upside move off of that structural change off the lows. And if you want to not get like structure fake outs, we had the downside move here. We had a reversal point, and this is still an upside move. Right? You could still keep the volume map from the downside like on a weekly, but realistically, this uptrending move hasn't really stopped since 26K here. This is still an upside move until we see a higher low get taken out. This was more of a consolidation high. You can make the argument that this was a low to a higher low to a lower high, and this is a lower low, right? So you could map it that way if you like too. It's going to be valid. It's going to work. I'm just keeping where we had off of this, structure change. So breakout and then higher low. So until we see another bigger structure change, then I'll shift the map to be the downside area. Yeah, you just add on to it. You'll be good. I answered the how many shorts. So yeah, okay, yeah, you saw. I read your mind. Good. That's a sexy trend line. Yeah, the SPY. Hey there. We're at 28.6 again. Yeah, I see. Yep. Flirting with that area again. Degen shorting 30-second. Come on. Yeah, we might be able to dump for it. Yeah, right. We could dump it out. I don't know if I have the liquidity to do that. I mean, we could make some phone calls, right? You get your friends to contact my friends, and we'll see what we can do. Yeah, I mean, nice move today. I mean, the situation with the information that got leaked out, I wish I could talk a little bit more openly about where I think they got that information and why. But I cannot, unfortunately, not on a live stream at least. Maybe if you poke and prod me in a chat somewhere, I might tell you, but not the truth. I'll definitely lie to you because I would never violate a non-disclosure agreement in that regard. And honestly, I'm probably going to be able to tell you pretty soon here why they wrote the article that they wrote, because pretty much once, I don't know, what's my clock, guys? Okay. If they have announcements, then I can talk about it. But I have a pretty good understanding of maybe why they did what they did. Or I could be completely wrong and things are just running concurrent, right? But there was a lot of OTC trading today. Let's put it that way. And if you are hooked up in the industry in any way, you knew about it. So big OTC moves. And with that went deals for miners, Coinbase, and MicroStrategy. Couldn't think of it there for a minute. But I've already said too much. I'm being told I've already said too much. Did I? I didn't say anything specific. No, no. Yeah, if you know anything about OTC, then you know that what was happening today was not exactly normal. Yeah. Yeah, don't be a jerk. You actually made me second guess myself for a moment there, thinking I said too much. Yeah. But look, moves are being made, and everyone knows. Well, it's gonna have something to do with all of this stuff. Let's put it this way. Everyone knows that an ETF is going to get approved at some point, and it is only a matter of time. And because of what happened on Friday with Grayscale and the SEC saying that they were not going to file an appeal, what that set up for today was a lot of early morning meetings, right? And those meetings were about like, okay, this is imminent now. Like the rubber hits the road. So if you are not positioned, you need to get positioned. If you don't have your pipeline, you need to get positioned. In addition, most all, if you're operating a firm or a prop shop in this case, you aren't necessarily going to position in spot, right? You're going to position in futures on CME. You're going to position in other futures products if they're available. You're going to position in the miners. You're going to position in the different, authorized exchanges, like the ones that are going to be custodians, like Coinbase, right? I can talk around this all day. And because of that decision, because it is now like, okay, we know what's going to happen now. We know that this, if there was a fight, it'd be a different story. Okay, they're going to appeal it. They're going to drag this out and possibly even, deny other, ETFs and the uncertainty surrounding that. There was clarity on it. And because there was clarity on it, you then get, you get yourself positioned the way that things need to be positioned for the future. I mean, and you got to understand that a lot of clients also started calling Friday, right? So, a lot of OTC desk trades are coming through various firms all over the United States right now because there's people going, okay, who do I talk to obtain Bitcoin? I want to get in prior to the ETF launch. Plus, I want to talk about XYZ regarding whenever an ETF launches. So that is something that you really have to understand because most firms aren't just going to hold BTC. If anything, firms are probably pretty excited about the prospect of options trading on an actual in an actual regulated market. Options trading spot Bitcoin. Like it opens up a whole new world. It's a whole new world. And that is something that there is a lot of pent up demand for as well with clients. And the main reason why is clients don't want to deal with frickin' I need a hardware wallet and I got to go to this shady exchange and then I got to enter in all my information there. I don't know how they store their information. I don't know. I don't understand the whole transfer process of Bitcoin. I don't understand how the network works. I don't understand what to do to remediate problems. What's the difference between a cold wallet and an exchange wallet or a hot wallet or a software wallet that is, a hot wallet that's not connected to exchanges. This is very confusing for a lot of people. And having it simply wrapped up in a product where at some point you can say, I want to redeem that. And you redeem your shares for Bitcoin once you understand what the hell is going on. And it all falls under regulation that's already existing. So there is legal recourse through various systems. Then that's very attractive for a lot of clients. And what's happening right now is the sales pipeline is being propped up. And there is a lot of people entering the industry, and it's been happening since BlackRock filed. A lot of firms have staffed up on people who are well educated with the quantitative and qualitative analysis side of things. So you got your on-chain guys and traders, licensed and bonded people who have experience in these markets. So just understand that there's a lot going on here as Bitcoin pushes up to 28.8, probably to retest 29. This is the way things are headed. Whether people like it or not. I happen to like that there's an ETF. I don't care that it's by BlackRock and all of these other bigger players, because Bitcoin is the underlying asset of Bitcoin spot is, you can throw as much paper at it as you want, but the supply and demand dynamics do not change. Jeez, Bobby. You're killing me. So, but yeah. Does that make sense? Oh, I know you guys understand it. I'm trying to talk around stuff right now because I can't say specific things. Because look, I can say this. I know guys in the OTC world. And they are, there's guys in the OTC world who are being tapped for their experience that are moving over into some of these larger firms, because these larger firms have a lack of talent that is specific to this area of investment. So I hope that makes sense. I hope that clears things up, at least for kind of a little insight into whatever you can glean from that insight into kind of how these things all fit together. And if not, just tell me I don't know what you're talking about. You're crazy. That's cool too. I have, by the way, thanks, Jimmy. Jimmy says I'm crazy. For those that don't know, he's a training coordinator for a sizable firm. And he does, you're doing everything from SIE to, you're doing all the way up the chain, primarily working with, Series 24, 57, getting guys in for SIE just to get their basics, Series 6 and 7 as well for FINRA certifications. So, cool beans. All I think that's probably going to do it for today if nobody has any questions. I'm not going to really look at alts today too much. I am not. I'm not going to be really looking at them until maybe Friday. I want to see how things go this week. We'll see what picture is painted coming into the Friday close for altcoins to see how they hold up over the week and see what happens from there. You guess you need to be trained. If you ever want to get, for those of you who are looking to get into traditional finance that have a good a good understanding of the crypto market in terms of knowing your way around, understanding, the on-chain stuff, understanding, where to best source some of the altcoin projects as well. And then you also have a FINRA certification. You can just start with a FINRA certification, you can just get the SIE FINRA certification, and many places will train you up. You'll usually get somebody that will, that you will be working under, that will show you the ropes, and then you'll get your certifications or licenses, basically, to then move into managing maybe live trade accounts, or maybe end up managing a portfolio or two. Very similar to what's done outside of the industry with associated industries like funded accounts, or funded futures and stuff like that, which you don't need financial or regulatory licenses. But if you do ever want to get in, you're for most places, you're going to need at least your basic FINRA certs. And then you can go to the more advanced stuff. Depends on what their goals are, what their aims are. But if you have knowledge in this space, that is being highly sought after right now, and there is a lack of talent in the industry. So, what's going on in here? Let's see. I'll just peruse the alts real quick for you. Yeah. Across the board, Bitcoin pumps. Everything's going to try to follow. Litecoin up. ETH is up. Pushing almost 1,600. ADA finally getting over that 24.5 price. It's been a little while. AVAX pushing back to 950. I bet you it hit 950, didn't it? Almost. Well, wait. It did. Oh, it pushed up almost $10. Very nice. It's like 980. Yeah. One of the things about AVAX is, I will say, is if it does put in a higher low here, it might try to end this downtrend, but it's been rough going for AVAX holders right now. If you're not trading it, the most advantageous trades have been to the downside at this point. And I suspect, as we're likely to see a lot of alts still stay depressed for quite a while. How did BNB do? BNB's coming off that low, 202. Yeah, pushing that upper second in today's candle. A nice low set on Sunday. So this was already locked in, and then a nice move up to the upper second. This thing is still super bearish below 220, 221. Some might even argue it's bearish below 235 or whatever, which I can't argue with that either. When looking at the weekly, that's basically bearish below 235. But Saw a lot of crow flowing today. And crow, yep, they sold the highs. It was yesterday? Crow? Yeah, it was yesterday. Are you sure? Oh, well. Yeah, then they got this. But crow also, look at that freaking, like, that wicked almost 6 cents. That's quite the run up and dump off. This thing is just down only. Doggy trying to set a low in and around our zone here. It might do it, actually. I mean, it already did on the daily, but it's more about the weekly right now, where it's, lower low in the trend, so it's trend continuation. This thing's gotta fucking take out like 8 cents to break this trend. I mean, in fact, no, it's 8.38 cents. Like, it's gotta have quite a pump. So, just kind of going back through here. I guess maybe we'll end this with looking at USDT. I had drawn this line across the highs. We got a deviation. This was 8.35% or 8.37%. Got that deviation above when Bitcoin dropped down to like that 24.8 level, and now it's downtrending. It failed this high at 8.2 on a close, and now it's USDT is looking to head down below 8.1% basically, which in general is going to favor not just Bitcoin, but the entire market if it does cross down and get continuation through this week. Probably sounds good. And Bitcoin dominance, I see you guys are talking about over there, can continue to rise. And when we see USDT outflowing, it's just Bitcoin is going to be beating most alts, which it is in this case. And it's not going to beat every alt, but when dominance is headed up, we wicked above the 5.218%. What did this get to today? 52.18%, excuse me, and it got to about 52.45%. So I mean, it's an uptrend, higher lows, above 51.86 today, and it's gonna, continue with this bullish reset of momentum that it's been doing on the daily here. Weekly's turned up above 50.22%, so looks good. It's closed above the upper first as well. Wicked into that upper second, starts closing above there. We're likely going to see this take off. Bitcoin probably rides to the upside as well. And alts will follow, especially if USDT dominance is falling. You're going to see just the larger proportion of that being, allocated to Bitcoin in this case. So, but I think that'll do it. You guys have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. I've got a meeting to go to. I'm going to put on some music here for the outro. And that might be a little loud. I can't tell, actually. My apologies if I just blew out your eardrums there. But yeah, let me go ahead and get this timer up here. We'll go 10 minutes at end of music here. Is it 12? Dude, 12:30 here. It's about 10 minutes. And yeah, so appreciate everybody hanging out. I hope you are having a wonderful morning, and I will be back later today with a Bitcoin in 60 seconds video. I think that will be an interesting one, as we will I'll be awaiting to see where today's close comes in, and that is going to heavily influence that analysis, of course, with the support and resistance levels in mind. And we'll kind of go from there. I will then also be back to live stream on Wednesday, and you guys have a great one. So with all of that said, Landy out. Yeah. Hold on. Hello? Yeah. Okay. I'll be over there in like, give me 30 minutes. Oh shit, my microphone's on. Hold on a second.
The Army Air Forces has announced that a flying disc has been found and is now in the possession of the Army. CBR 3